Welcome to the Snapshot edition of the Daily Video Update. I'll briefly cover the action in the market for Monday, April 11th, and then see how things are looking for Tuesday, April 12th. And it was a pretty negative day. We pretty much have gone negative across the board. A lot of technical damage has been done. Doesn't mean that we can't bounce from here, but looking at all of the charts right now, we're either have already gone negative or are getting close to going negative. And on the S&P anyway, we've broken through pretty much all of the moving averages except for one. And I'll briefly point that out here. So after Friday's session, you have to wonder, okay, people might have had a chance to sit back and regroup and think about things. And well, things ended up opening up negative on Monday. We had a gap lower and we actually went all the way down to S2, and selling then took prices actually below S2. We did not get to S3. So I don't know if you want to take that as positive or negative. And then for a lot of the day, we ended up just kind of chopping sideways. But as we got closer to the close, there was some more late day selling. We closed right at the low, and we ended up being down 1.69%. One potential positive thing is that we saw below average volume. Now, we've been seeing below average volume on up days, down days, on almost unchanged days. So I'm not quite sure if that's a real positive, but right now we kind of have to look for some things. The technicals are pretty much across the board negative, and those that haven't switched negative are getting very close. The real fixation right now is inflation and interest rates. And I have one chart that I'll briefly go over that shows as interest rates are going up, that is sending the tech sector lower. There's an almost perfect inverse relationship happening right now. We're going to get the CPI on Tuesday, and that is when the inflation report comes out. So that could have a real influence on things, either positive or negative. We'll just have to see how the market takes that. And then all the geopolitical concerns, Russia, Ukraine, the lockdowns in China, which could feed over into the US economy, and supply chain issues, oil issues. Transports are having a real problem right now, even though they bounced a little bit on Monday. But any one of those could come to the forefront. But what the markets are fixated on right now is rising interest rates. So what are some comments? The technicals are negative. We're below the 50-period simple moving average. The rising interest rates are really impacting growth stocks. One interesting thing too is the yield curves are no longer inverted as of after Monday's session. Now they could go back to being inverted. Doesn't mean that they're going to stay uninverted, but for the current time, they're either at zero or have gone back into more of a normal relationship. The one concern that I'm seeing though is sentiment is not really dropping. People are not freaking out. You would think if we are seeing these declines that people would be showing a lot more fear. And we're seeing a bit of a pickup in the VIX, but our other indicators and the index that we look at is really not showing us that right now. There were no economic reports that came out on Monday. The current market valuation still has things at fairly valued. And please check out the weekly video where I go through that a little more in depth. They tend to update their charts about once a week, and usually it's over the weekend. Our trend right now, we're in a trendless environment because the ADX is below 20 and continuing to decline. The bias is negative because we've had a down day, and the momentum is negative because we've had down days for the last 2, 3, 4, 5 days. We did have Thursday that was positive, but it's kind of being overtaken with more negativity right now. This is what I wanted to show as far as the fear and greed index. When we hit that low back in the middle of March, we were pegged way over here into the red. Well, we're just kind of floating around the neutral area right now, which could suggest that we might have some more room to fall, because people are seeing prices go down, but they're not really freaking out about it. So there's no real kind of critical mass happening right now. Some of our short-term indicators are actually oversold. but it's not being picked up with sentiment right now. Here's the daily chart where we broke down below through the daily pivot. So that's negative, and there's really not an awful lot. We do have some other potential support levels that we could hit, but there's a whole lot of open real estate here. Now, it doesn't mean we're going to go straight down, but we could end up going higher, but we have also a lot of resistance above where we're at. And then looking at the bottom, you can see where volume, it was higher than on Friday, but is still below average overall. And then here's our ADX, where we've dropped down below this static number of 20, and we're continuing to decline. The red line's on top, that's selling. The green line is on bottom, that's buying. So this is overall negative. Then here's our moving average spaghetti tree, where this is the one moving average. We closed right about at the 200-day exponential moving average. We've fallen through all of the other moving averages now. So will that give us some support? Most people tend to use the 200-day simple moving average, and we blew through that a couple of days ago, and we blew through the 50-period simple moving average, but we're still right at the exponential moving average currently. And we're just slicing through our rainbow pretty fast, and we're getting down to the bottom end of the rainbow. We are also negative longer term because we remain below the 200-day moving average. It's now calculating at 44.93, where we are at 44.12. Yeah, 44.12. So price is below the longer term moving average. This is the yield curve chart. Above here's the S&P, and these are all the different yield curve spreads that I plot all on one chart, where it might be a little hard to see. You might need to make this a little bit, blow it up a little bit, but we're either negative, or excuse me, we're either back to zero or we're above zero right now. And then if you look back in history, sometimes when we have seen an inverted yield curve, after it gets done being inverted, sometimes this can produce a really solid up move in stocks. Is that going to happen this time? We don't know, but we just look at what has already happened, compare it to what's going on right now, and then see that as a likely scenario. And here's another new chart. This is a correlation chart. The dotted line is the 10-year yield. Those are interest rates, and they're just going up. The black line is tech, and we can see as interest rates are going up, tech is going down. How we measure this is down on the bottom. This is a correlation. If the two move hand in hand with each other, it will have a really close correlation to 1. If there's really no correlation at all, it's zero. If there's an inverse correlation, we get closer to 1. And currently, right now, we can see that as interest rates are going up, tech is going down, and that's a very strong relationship. Now, it doesn't mean that it's going to stay this way. And you can see there's other times when tech and interest rates have gone up together in a really strong relationship. But for right now, we're seeing a complete inverse relationship. So what's our outlook for Tuesday? Our technicals are pretty much negative. We're in a trendless intermediate term range. We still have this battle between growth and value. Interest rates are the real concern now, and will probably be an even bigger concern on Tuesday, either positive or negative, with the CPI coming out, as well as the different supply chain issues. They still have the lockdowns in China right now. We do have the CPI coming out on Tuesday, and then the whole list of other geopolitical events that at any time could come to the forefront. So what are our different scenarios? To keep going down, just kind of keep doing what we're already doing. Rising interest rates, if they continue to go up and we see a real spike in inflation fears, that's probably going to drive stocks down. And our technicals are negative, and so that would help out that scenario. What could help us to go up from here? We do have that positive backdrop after yield curves re-invert. I don't even know if that's a word, but there has been some historical precedence at some point that might happen. And so that could be a positive scenario. A few of our oscillators are still positive, but they're just getting ready to cross over negative. And the moving averages, we have the one moving average in the S&P, the 200 exponential, and then other moving averages on other indexes, as well as the pivot points, may end up providing some kind of support. And then the current scenario that is being played out right now is that we're in a sideways market because the ADX is below 20 and is continuing to decline. When we are in that type of environment, we typically see a real slowdown in price movement and really choppy conditions at that time. Okay, so what is our conclusion? The S&P is now negative. Short term, we're negative, but also giving some oversold conditions. Intermediate term is slightly positive to negative, but is really showing some weakness with our oscillators. And again, as I said, with the moving averages, some of those pivot points may provide some support. We did close below the 50-period simple moving average. And long-term, we're now back to negative because we closed below the 200-day simple moving average, and we've been under that for a few days now. So just to remind you of the different videos, what you're watching right now is the daily snapshot video. If you want to have a more in-depth look at the day's action, please go look at the full-length version of the daily video update. Or if you want to see more about the current market valuation, go back and check out the weekly video. And then these ones with an asterisk are videos that I intend to post soon, but have not posted yet. So thank you. Have a really good Tuesday, and I'll prepare the next snapshot update after Tuesday's session.